Good morning. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Meghan. With us is University of Missouri Scott Brown. As we get things started today, we're going to talk a little bit. We'll talk a little markets. We're going to talk a lot about what's going on government-wise, how that's going to impact some reports that we normally get to talk about. And we'll take a look and kind of outline how 2019 could shape up for livestock producers, cattle producers specifically, as we're taping here today at Missouri Cattlemen's. Good morning. I'm so used to saying good afternoon because we do this in the afternoon. So
good morning, Megan.
Let's start first and recap the markets. I know the last week of December was super slow because of the holiday and obviously the government shutdown, and so there really wasn't a lot to talk about last week. But cash business after the holiday this week picked up, and that was pretty impressive for me to watch on my side of things.
Yeah, absolutely. We did get some movements this week in markets. It looks like we're going to end up this week with some higher fed cattle prices. We're still kind of waiting for some trade to happen here very late in the week. Not a lot of tests in terms of feeder cattle cash markets this week, again, just given the slow start with the New Year's holiday. If we look at the future side, it looks like this week for the February live cattle futures, we're going to be down about $1.70. On the feeder cattle side, that March contract down $3.35. I think a little bit of that had to do with what's been some strength happening in corn markets this week. We're up about 7.5 cents on those March corn futures contract. On the hog side, we're about even this week in terms of hog prices, I guess is what I'd say at this point. The February lean hog futures was up $1.70 this week.
I think it's interesting. We had such a slow start. I think around 400,000 was the kill total on Monday on the hog side of things. But as that week progressed after we resumed out of the holiday, I'm sure happy that we have expanded slaughter capacity because they pushed some pretty large numbers throughout the week. And we're looking at another big kill total for Saturday. Yeah,
absolutely. We're going to continue to see, I think, some large runs here as we start the year on the hog side. And I remind us all the time that it looks like we're going to have lots of meat to deal with as we go through 2019. So we don't want to forget the supply side of livestock markets are certainly going to grow this year.
And we're going to talk a lot about demand and exports specifically on the cattle side of things, because that's been such a strong suit for 2018. I think that'll carry over into 2019. I think we need to start with the government shutdown. So we know that, 60% of USDA workers are still working, correct?
That's correct, but fewer, I think, as we go through time.
So as we take a look at that, how does that impact those reports? We don't necessarily see an impact on our daily reports, but some of those bigger reports, WASDE specifically, is going to be challenging.
Yeah, so I think today we'll actually finally get some USDA announcement about next week's WASDE report that is supposed to come out. I have a hunch that if we see the government continue to be shut down, that will be delayed, and they'll probably only give us some expectation of once the shutdown's over, how many days until they'll think about releasing a WASDE. I assume if it goes far enough into the month with the government shutdown, we could see actually no WASDE until we get to February. I think it's a little too early to tell. I guess from a cattle perspective, I'm more worried about some of the cattle reports that'll be coming out as we get later in the month. So, we have a big one coming out with cattle inventory here at the end of the month. I think NASS should be doing some survey work on that report already. And so I wonder, even if we get the government opened up fairly quickly, whether those reports get pushed or not. Cattle on feed being another big one that also I think is going to be important for us to see here as we start 2019. So a lot of uncertainty about what we get. I just go, less information is coming. Even on the trade side, some of the monthly trade data that we get from Department of Commerce that's also being affected by this shutdown is important to decide where these markets go as we start 2019.
Does that lack of information also maybe carry over into the uncertainty and impact our futures trading and what goes on there?
I think so. I mean, everybody's going to be searching for information, and if you don't see a USDA report or a Department of Commerce report, you're going to be looking for other sources of that data. And that may make markets be a little more volatile than otherwise would be the case, as some private sources will probably try to be out there filling some of the void left by the lack of USDA reports.
So let's start first and take a look, big picture outlook for 2019, and the lack of, I guess, not having a direction when we think about that cattle inventory and some of those informations that we use to take that big picture. But let's talk about what it looks like and how things are shaping up after 2018.
Yeah, so I think when we look at cattle markets and you look back at 2018 for just a second, it was a much better year than we would have anticipated going into 2018. We moved a significant quantity of beef on the marketplace, and we moved it at, in some cases, higher prices as we went through the year. Exports were very strong on the beef side. I sometimes think as we look at agriculture today, we're looking for those enterprises that are more positive, when we've seen a lot of our ag enterprises that have gone down in terms of profitability. And I'll sometimes say cattle might be at the top of the list today in terms of that profitability side. And in 2019, I guess, as I look, number one, I don't want us to forget that we're likely going to put about another 700 million pounds of beef production on the market in 2019. That supply continues to overhang. You don't have to ask very many what happens when you put more beef on the market to prices. They always talk about them going down. Now, the flip side of that is demand's been really good, both domestically and internationally. And so I could actually look into 2019 right now and say, if domestic and international demand remain as strong as they did in 2018 into 2019, we could see prices that rival where we were in 2018, or maybe even a little higher.
Now, we had start to see expansion in the cattle sector slow. Maybe not stop. I think we talked about it, maybe taking a step back or slowing its clip. Could increased prices in a profitable sector, cattle sector, or a more profitable cattle sector, maybe reignite that fire into expansion in the cattle industry again?
So I think we could see some expansion occurring in 2019. For me, I think it depends a lot on available supplies of pasture and grass. We've seen some nice recovery in the fall from what was a very dry situation in many parts of the country. You add ample supplies of grass with some reasonable profitability, and yes, I think we could get some expansion. Right now, if we get the cattle report on time, I would suspect that we're going to talk about beef cow numbers that are about equal to where we were a year ago. And so not a lot of growth. The first time in a few years that we aren't going to talk about some substantial growth in beef cow inventory. However, we could go through 2019 and talk about some expansion occurring. And so I don't want to leave us with the idea that beef cow numbers are headed down from this point forward. I think it does depend a lot on just what happens on the grass side of the situation as we get into 2019.
You talk about maybe some of those indicators for expansion in the cattle sector. What numbers specifically do we watch for in those reports to pay attention to see how maybe it's growing or if it's growing?
So I think most important is just what we get in terms of beef cow inventory here in that report. Right now, I'd say my estimate's up about 0.1%, so virtually unchanged. If we start talking about 0.5% to 0.75% higher in beef cow inventory, that could be one of the things that start to make markets a little less positive as we go through 2019. But that's the one I'm going to be keying on here in the very near term.
Do we also, as we look at the outlook for 2019, keep in mind and pay attention to what's going on? Obviously, trade, tariffs, that situation. I know things are getting better or starting to make improvements, or we've made those first steps to improve the trade situation with China. How does that impact potentially the beef sector if they don't get it worked out? Because it's not been, it hasn't been affected so far, but could it come into play as well?
I suppose it could. I think here's one where in some ways you might be happy, the industry a little happier that they haven't had to rely on China so much. It's been other markets that have been unaffected by some of the increased tariffs we've seen happening in China. So for me, as I look in 2019, I think about Japan and Korea, two markets that were growing substantially in 2018. If we were to talk about a new bilateral agreement with Japan, that could be very helpful to us. And that probably doesn't change things overnight, but long term makes us more competitive with other suppliers like Australia. We still face very high tariffs for products going into Japan, and if we can work those tariffs down, I think that gives us a chance to grow that market. We can talk about what happens with the new USMCA agreement as well. I think that's critical to cattle markets, and the politics of how all that plays out in 2019, I think are going to be really interesting.
We know that TPP is moving forward without the U.S. How important, and especially because it puts U.S. beef at a competitive disadvantage to those other countries that are in that agreement, how important is it for us to focus and really lock in on getting a bilateral with Japan?
I think it's one of the top priorities that the industry should be focused on as we look at 2019 and beyond, because if you look today, we face a tariff somewhere in the mid 30% range for many of our products that would head to Japan. Australia has already got their own individual agreement with Japan that would actually lower their tariffs all the way to 9% over time. So that's a very different playing field. And so I'll say that's one of the most important long-term things that I think we can work on.
I think it's been interesting. We've seen how Morocco, for example, so some of these smaller markets but are getting U.S. beef into those smaller markets with the issues that we've seen with other proteins that are so reliant on, let's say, China and Mexico, for example.
Yeah.
How important is it that the cattle sector keeps diversifying those markets, and the beef industry is having these diversified, maybe even smaller markets to move product into? Yeah,
so very important. I talk all the time about risk management in the industry. And now all of a sudden I say this is risk management in a different way. As you think about more countries consuming U.S. beef products, if we lose one of them, we don't lose such a large proportion of what's exported. If you think about, what's been happening with China and pork, it's certainly been problematic for us. Mexico and pork, ham prices being essentially 30% lower as a result of the tariffs put in place with Mexico. Those are the things that, as we diversify, we don't want to be so reliant. Just take soybeans for a second. We saw the large decline in soybean prices that happened as the Chinese put tariffs on our soybean products. If we would have had some other markets, perhaps that would have been muted more than was the case. And so that kind of risk management is maybe different than we traditionally think of, but it's important for the industry as a whole to think about.
I think the other interesting part of that too is, as you take a look at those numbers and where those products are going, it's not just there's just different aspects of it, and I mean, the volume is still there on, let's say, on the pork side of things, but the value has dropped off significantly, and beef hasn't had to face that this year.
That's correct. Both when you look at volume and value on the beef side, it's just been a stellar year, and I think much of the reason why we saw 2018 as strong as we did was just what happened on the export side. When you look at pork in particular, we were actually up about 1% in terms of volume of pork that left the United States in 2018. But on the value side, you could see, again, hams going to Mexico that were down 25-30%. So that value side of the equation was what really hurt us in that regard. And again, that ability to move to different markets more easily. And again, I also think it's important to remind us that there are products that we're consuming here in the U.S. That other countries are maybe after different parts of that carcass than we are. And so being able to find value out of more pieces of that carcass, I think, is important going forward. And those export opportunities help raise the overall prices that we see here in the U.S. for cattle producers.
And we anticipate, at least at this point, that momentum carrying over into 2019.
It sure looks like it. There's maybe a few clouds on the horizon when you kind of look at the global economy. We've seen what's happened to our own stock market here over the last 60 days or so. But so far, I think we still expect a lot of growth happening in front of us. Don't expect the dollar to strengthen too much against many of those currencies. So I think we can still look ahead and see some pretty positive signs this year.
Can we talk a little, probably a little off topic or a little off center, interest rates, how does that come back into play into what we think about when we're talking about risk management and those types of things as well?
So I think so, to an extent. Yeah, higher interest rates are certainly something that we're going to have to grapple with in the industry. I guess in some ways I go the rest of the economy is growing so strongly, yet when you look at what's happening to agriculture generally, we've been moving the other direction. We kind of had our good years back in, I'll say 2013, 2014. It depends on the commodity, of course, but record farm income to now farm income that's half the level it was at its record peak. You know, much of that concerns me in terms of the effect of interest rates for our industry relative to the rest of the economy. A little harder for us to handle those higher interest rates, and it's going to make us push that pencil a lot harder as we look forward in a number of commodities, not just cattle, but across all of agriculture.
Let's talk Farm Bill. Farm Bill signed. Now it has to get implemented. I know not a lot necessarily. The FMD Bank is probably the biggest livestock component of that, but as those Farm Bill programs and their implementation start, how does the government shutdown come back into that as well? Absolutely.
I think even for those that are looking for those market facilitation program payments, if they hadn't gone in and certified production before the shutdown started, they're going to have to wait on those payments until USDA opens back up again. But from a Farm Bill perspective, I will say we see a lot of the same in many ways in terms of the safety nets. Number one, crop insurance continues pretty much unchanged relative to what we saw with the 2014 Farm Bill. We have ARC and PLC. For those producers that are out there that are going to have to make those decisions now, instead of a one-time life of the Farm Bill decision for ARC versus PLC, they're going to make a decision in sometime in 2019, which again depends on when we get things opened, for the 2019 and 2020 crops, and then they're going to start to be able to make that decision every year. So more decisions in front. Maybe that'll keep some folks happier, but I always say I can tell you exactly whether you should have picked ARC or PLC after the fact, not before. And so we could see a situation where some producers thought PLC might be the right way to go, and it ended up ARC might have given them a better payment, and they'll be less than happy with having made the wrong choice. But we're going to get to see more choices made in front of us on an annual basis. Conservation Reserve Program, often we talk about that relative to cattle markets as well. We are talking about going up from a 24 million acre cap to a 27 million acre cap over time. I don't think that's going to have a big impact on markets, regardless of whether it's cattle markets or crop markets, but we are talking about a slight expansion in CRP anchorage as well.
We've talked a little bit about demand, specifically on international demand, global market. Let's talk domestic demand. Jobs report came out this morning. As we take a look at those numbers, really another strong month in the economy.
Yeah, absolutely. And I will say that is the key indicator for me right now as we go through 2019 is we need the domestic economy to continue to grow, just given the sheer amount of meat that we're going to put on the marketplace, and likely some of that domestically. Over 300,000 jobs. It really shattered pre-report estimates that suggested we'd be somewhere around 175,000 jobs on average pre-report. So another very stellar jobs report. We do see a few things that to me suggest the economy might be softening a little bit, but this certainly flies in the face of that when you talk about that job growth. I think it's important because I believe we're creating jobs for those that are going to use a portion of that new income on meat purchases. And I think we're pulling up the maybe lower end of our distribution of income a little bit in 2019. And I think that could certainly help us in the cattle industry with folks buying up, buying better cuts of beef. We've seen the demand for higher quality beef be quite strong, and that could certainly continue in 2019. If you want to tell a downside risk story, it is that the economy slows significantly and we start peeling jobs. And that's one where I think we could get some fairly quick adjustment downward. So I like to remind us there's upside potential in these markets for sure, but there's downside risk, and maybe more downside risk than upside potential. How can I protect that against that downside risk but leave myself open on the upside? That's not risk management that we do very often in the cattle industry, but 2019 might be a year to be paying more attention to that risk management component.
When we're looking at that risk management aspect of it, does that mean making some investments in genetics and looking at maybe some non-traditional ways to manage risk?
So I do believe those are important, and I think we've seen the industry be making leaps and bounds in that. I think that genetic progress is something that we're not going to jump off of now. If you get left behind, I worry about what happens to those cattle that we don't know so much about in terms of their value going forward. So I think that is important in terms of that genetic improvement. I will say, doing the same thing year after year after year, so turn the bull in at the same time, you wean at the same time, and you market the same week every year, that's a risk management plan. It might not be the best one. So more flexibility in those marketing decisions, I think, are going to be important, because we're going to have volatility, whether it's Japan or something else that comes along. We seem to not have a lack of volatility in these markets, and I don't want folks to get caught on that downside that a few weeks later could look, much better. We could certainly look at pork again, where we saw hog prices that were very low in July as we thought about the effects of tariffs, and then along comes African swine fever and pushes those prices higher, despite we were pushing record supplies of hogs to the market. The same thing can happen in cattle.
And on the hog side of thing, I think we can't not mention there was another outbreak, and this time on a more technologically advanced. So it went into one of their larger operations, and I think it goes to show that they, one, don't have that disease under control, and two, it's not just spreading between those small producers, between provinces, it's now getting in, and that's where that big impact potentially on their herd is.
Yep. So I think even for cattle markets, we have to talk about African swine fever for a little bit. It could be the one thing that gives us another boost in terms of what happens, because when you realize that half the world's pork production happens in China, if they have a significant disruption as a result of African swine fever, and I keep saying that's a 0-1. It's binary. It's either going to be big or it's not going to be much of an effect. And when I look at what's continued cases that are reported now, a commercial operation, all of a sudden you realize it's probably going to be a bigger thing to deal with. That could push pork markets up significantly, and I think we could get some support on the cattle side as a result of that as well. So a disease outbreak here, so we may say, out of the Farm Bill we got an FMD bank. What's that really mean? I don't want us to forget that not having a disease in this country is very, very important to keeping markets open around the world for our products.
Normally we preview, actually we have restaurant performance yet to talk about on the domestic demand side of things. As we take a look at that number, what did we see this week?
Yeah, so when we look at that restaurant performance index for November, we actually got up 0.5% in the overall index from the October number. So we keep getting this where we get demand strength in terms of that current situation index. It sits at 102.2 in the November numbers that we got out today. So we continue to see fairly strong restaurant performance index. And for the cattle industry, for a minute, I ask this all the time. So if you want to go have a really good meal at a restaurant, what do you go eat? Steak, right? So I go, restaurant performance index and the strength that we've seen there, I think, has been more important for cattle than maybe the other meat components. And so we want those numbers. We want that traffic to continue to increase. We want there to be more expectations about growth as we look forward in 2019. That's kind of the next step in, if you will. So we can talk about jobs and economic growth in this country, but all of a sudden tying it up back to that restaurant performance index, that's kind of the next step of what's it really mean. And continuing to get good news there is going to be critical as we go through 2019.
So encourage all of your non-cattle cattle producing friends to go to restaurants and get steak.
That's right. Yeah.
Yep.
So in fact, doing a few pork meetings out there where I said, where do you go when you want to have a really good, or what do you eat when you want to have a really good meal? And having pork producers answer steak might tell you something about where beef has found itself in terms of providing that if I'm going to go out and have a really good meal, I'm going to likely go get a steak. And I think that's a sure sign of just the demand growth that we've seen happening on the beef side.
And the quality of U.S. beef.
And the quality. If you look at what we're doing here today, I think it's been impressive in terms of the change of what we're putting in front of consumers. And when you realize not many of us go sit in front of a meat case anymore and look at what's the price of pork, price of chicken, price of beef. That's not how we make our consumption decision today. It's made at which restaurant do we go and visit. And finding those high-end restaurants that tend to feature beef tells you that consumers are finding that beef eating experience really good right now. And being able to provide a consistent product is something that I think this industry has done a phenomenal job with.
Just a side note, we raise beef on our farm as well, and like to have access to that all the time is great. My husband, though, has no greater thrill than when he gets to go to our local meat market in Lexington and pick up like a big standing rib roast or like a big high quality piece of meat, and he comes home and he's like, look at how beautiful it is, and has to like show it off, and it's great, and it's great to have that available to us.
Yep. I think we're finding just so much more consistency in what we're putting in front of consumers, and that's part, I think, of the genetic growth that we've seen in the industry as well. We want to make sure that eating experience is always good. It doesn't take many bad eating experiences to get consumers to shift, but as long as they're consistent and good, I think we'll continue to see growth. And many of those restaurants will say it's as much about that consistent eating experience as anything else, because they need traffic through that restaurant, and one poor eating experience, and what do? You don't go back to that restaurant again. So that's where I think the industry's done much better at this consistency side.
Normally we preview reports for next week, but that's a little bit in limbo, I'm assuming, at this point. Yeah,
so we hope, we would get monthly trade data next Wednesday, and also get a WASDE out as well. But just given the government shutdown, I know that USDA is saying today they'll make some release about what happens to WASDE in terms of delay. But at this point, given the government shutdown, I'll be surprised if we see a WASDE report next week.
You can subscribe to our weekly livestock market update by visiting our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments for us there as well. And you can get market updates twice daily with John Perkins' Market Minute. I'm Meghan Grebner from the Missouri Cattlemen's Association meeting on Brownfield.